Hello, this is Vance, and today I'm going to start something brand new. It's October the 29th, 2014, and I'm going to teach the slow hand method of price action from the beginning. Now, these lessons are going to be very quick. I'm not going to spend a lot of time in each section. There's not going to be a tremendous amount of explanation what goes into them because I want to go through this rapidly. I want to give everybody that's looking at my YouTube channel the outline of the slow hand method of price action in, let's call it 5 lessons or less in less than an hour. So we're going to do that's what I'm going to try to do. I'm trying to go through the whole thing rapid fire and to kind of show you the whole thing from beginning to end. Now, this is going to be a condensed version. Each individual segment has a lot more explanation involved in it. And I hosted a course, and I continue to do that, hosting a course to get into details of this. But I'm just going to give you the brief overview of the whole thing. And I'll go rapidly through it so that everyone can get an idea of what I'm talking about. And you can ask questions and do the whole thing. But this is what I'm going to do because I thought it was getting kind of boring of talking about the same old thing over and over again as far as why you enter here and so forth. And I was looking, and I mentioned yesterday that I was going to change something up. So that's what I'm going to do. So I'm going to go through a number of courses. I'll probably be able to cover most of this off in 10 lessons, I would think. And if they're probably 10-minute lessons, snapshots. That's what I think I'll do. So it'll be 10 minutes, and it'll just be a brief overview of the slow hand method for price action. So that's what I'm going to do, and hopefully we'll get some good feedback going with this. So what I'm going to do today, let me back that up a bit. Chart lesson. Slow hand method, what I'm going to cover the chart setup for the 800 tick chart on the CL. The indicators used, and these are the indicators that I use. I mean, the most recent ones, you don't have to use any of these if you don't like to. But the overnight high, low, and close, that should say previous day, overnight high, low, and close. Let me start at the beginning. 21 EMA. Now, you must know what that is. 21 exponential moving average. The overnight high, low, and close. That should say previous overnight high, low, and close. Now, open, high, low, and close. I don't use the open or the close. All I do is the high and low. Now, I won't have that on today's chart. I'll have that in future charts. I also use the current open, high, low, and close. But in both those cases, I eliminate on the previous, and that should say previous indicators used, previous open, high, low, and close. I only have the open and the close from the previous session. For the current open, high, low, close, I only have the opening price, the current high, and the current low of the day. I don't have the close. It's irrelevant. You need that because by the time the close happens, it's the end of the day. You don't need it anymore. And I have a tick countdown. So that's 800 ticks. You'll see that counting down. And I'm also going to cover today channels, trade channels, and lines of support and resistance. But remember, this is going to be 10 minutes, so I'm going to go through it really quickly. One thing I didn't add on here, I'm also going to cover second entries and how I count them off. So second entry should be in there. I apologize for not putting it on there, but I'm going to go through rapid fire for second entries, channels, support lines and resistance, the indicators used, and the chart setup. So that's a lot of stuff to cover in less than 10 minutes, so let's get started. Okay, here's a chart for today. Now, I got this purple box in here, and let's eliminate that for a second. But I had this up here because today was the inventory report day, but let's just talk, we won't talk about that for today. So here's I'll show you the chart setup is the open, high, low, close. I'll talk about that in future seminars, but there's my line right here. This was the previous day's open, the previous day's low, and the previous day's high right here. So those two lines right in this case. I don't have the current day open, high, low, open or high, low because the next day is already open. If you look back here, it's already open, and that will just mess up the line, so I don't have that. So we'll talk about that in another day as well. But let me just show you what my chart setup looks like. So I'll show you the data, my data series, and here's the chart up for the 800 tick chart. So you might want to take a look at it. You can see that 800 ticks, red, green, black, two-piece. There's 650 days to load. You don't probably need that many days because I just have it in there. NYMEX metals. Energy, this is the session template. You see all the other stuff in here, etc. And of course, you got the chart there. And if we look at indicators, and the indicators are right here. You can see my indicators very quickly. You have prior day, open, high, low, close. I don't have the other ones. I don't have the current day because it messes it up, and I didn't want to do that. But it's on. Believe me, it's been saved. The EMA, which is 21, and the tick counter is 800 tick counter, so you can see that. But I'll have that in future days, so I'll have that later. I'll show you how I use it. So that's the setup. When I come into the first thing in the morning, I want to see this overnight and see the overnight ranges. And so I put these lines in here. Let me just kind of make this a little bigger and it's easier to follow. And just like so. So I have the chart up here like this. And so I see what I've done here. I've put this up here like this. And I put this down here like this. And I doubled it and I've just, oops, it's not even straight. What am I doing here? That's better. I like it. And I try to make it a best fit. So that fits pretty good around here, I guess. Somewhere like that. Okay. Now these lines here, as far as support is concerned, I want to see where the most touches are when you have these combination bars. So we have this bar come back down here. So that's one. So I mark it down here. I mean, you could say it's up. Where's the most touches taking place? Somewhere in this neighborhood, perhaps. You can pull it back down to here. But then we have this other move down to this area. So where's this area? So this is a support and resistance. I'd say it's probably about here, give or take, because this is where the most touches are. Over the most period of time, you can see that this touch, it might be a little bit higher. Okay, or like wherever the most touches occurs, particularly in this area right here, like the more recent time. So you can see that, you know, we had a touch here, came back, a double touch here. This one in this area, pulled back, touched back here, pulled back, and then we had a touch here. Almost one here. So you can see that this is where, over that course of period of time, that's where the most touches occurred. That's where I want to put my lines in. For the tops, the same thing. Let me just pull this down here. Most of the touches take place right about here, you know, through these ones right here like this. That would probably be accurate. And I try to use it on the closes because the closing price, closing and open, well, the closing price particularly, is the most important price because you always see the close of the day. So I want to see the close of the bar. So that's where I give a little bit more weight to the closes. And that's where, so I want to look at those areas as well. But that looks pretty good, like a good fit, where you can see most of the touches take place there. And if you looked at any other chart, you'd see that this area, this is where price revisited the most in this sequence of bars. Okay, very simple. This is where prices is where we had the most, like higher highs through this area and lower highs through this area. That's where most of them took place with these bars. So I looked at it as a visual reference. Okay, so now we've got our lines, our channel. That's approximately our channel, support and resistance. For a narrower channel, I want it more in the closes like this one. And you can see that this is a narrower channel. These are channels are a little bit narrow, and you can see between here, these bars are gathered up where off the closes like this. You can see there's a break here, and then you can also say that there maybe is just another channel down here. But those are, so these are a little bit narrower channels. These are wider, and for these wider channels, you could have a narrow channel in here as well. So give you an example. This is a channel right here like this. This is a pretty narrow channel again. And so this is a channel. So this is how I build up my channel. So channels like this. Now this comes straight out of Mac, talks about this as well. This might be a little bit more like this. But he encourages ones to draw your channels like this. And the reason you channel, it's a visual reference, but you want to see a break of these channels before you look, or you want to see failure back to these areas just as a visual reference. So these are relatively close, I suppose. These move fairly rapidly. Okay, so that's what we've got that. So we've got the channels. Now we're going to cover what I'm going to talk about. Once we've got the channels, we've got lines of support and resistance. Where this is really kind of almost like a trading range, but I'll talk about that in later sessions. But I want to focus on second entries right now. And so let's talk about second entries. And when I'm talking about second entries, a second entry is no more than the market attempting to do something twice and doing the opposite. So in the case of a second entry long, it's a market trying to go down twice and fails and heads in the other direction. That's what second entry is. Second entry short is the market trying to go higher twice and failing the other direction as well. And you can see this in a visual representation. Typically, there'll be opposite color bars, and typically you want to trade or enter a trade on the basis of the bar that's heading in the direction which you want to trade. What I mean is, if you want to go long, you want to enter your signal bar should be on a bull bar. And if you want to go short, your signal bar should be a bear bar. and it should be a strong bear or a strong bull bar on the 800 tick chart. What I mean by a strong bear, you know what that means. Typically, it means that you'll have a flat top on that bar heading in the direction of your trade. Like this trade right here. This bar right here, that's a strong bar. This one, it's a flat top. It closed on its almost very, very high. Okay, so you can use that as an example. Now, let me just see for a second. I just want to just double check something. Okay. Okay, so we'll look at it. So it just, oops. Okay, let me just get to that. All right. So now what I'm going to talk about is, let's talk about where the second entries are. And I'll just have this on my drawing. So second entries, I'm going to do it very quickly here. Second entries. Price makes a new high. Anytime a price makes a new high, you look at and if we're going in this direction, if we think this is heading in this direction, or price is going obviously up or down, we count off the previous bar. So we want to see the new high. Price makes a new high here. First entry, there's no second entry here because price continues to go up. Price makes a new high. Here's your first entry. Pull back. Pardon me. This is the first entry right here. I think it's the first entry. So this is a zero count. Zero. First entry, pulls back. Second entry right here is the second entry. Long. Price moves up. New high. First entry, no second entry. New high. First entry. Okay, this bar here. So here is your zero count. Zero count. First entry, pulls back. Here's your second entry right here. Okay. Here's your signal bar. Now, I'm not saying they're good or bad. I'm just talking about these. Zero, first entry, no second entry. Zero, first entry. Here's your second entry right here because this one's lower. Okay. Zero. I think it's first entry. Yep. Second entry. Zero. First entry. Here's your second entry. Ooh, wait a second. I don't know if this is a second. This looks like a second entry right here. Okay. Long. But you can see, even though the second entry is long, it's heading in the other direction. Why is that? I'll talk about that. So let's not worry about that. Let's take a look at second entry shorts. Even on a rising scale, zero. First entry. Pulls back. Second entry short right here. Okay. I'm not saying whether they're good or bad. Price makes a new low. First entry. Pulls back. Here's your second entry short right here. Zero count. First entry. Here's a second entry right here. Okay. Price makes a new low. No first entry, no second entry. Zero. Price makes a new low. Well, pardon me. Price does make a new low. No, it doesn't make a new low here. First entry, second entry right here. Okay. Price makes a new, this is a price makes a new low here. First entry, no second entry. Price makes a new low. First entry, no second entry. Price makes a new low. First entry, no second entry. So you can see that you can count off both sides. So that's the first thing you want to do. When you pick out your chart, and I recommend this to everybody, when you look at your chart at the end of the day, you draw your lines out, print it out, and look at all the all the second entries throughout the day on the 800 tick chart. That's your exercise. That's what you want to do. Look at all your second entries. Don't whether they're good or bad, just count them all off. That's exercise one. And that's it. So I went 13 minutes, didn't go 10 minutes, but I just went a little bit longer than that. However, so that's lesson one. Remember, what did we cover? We covered chart setup, indicators used. I will talk about that. Channels and support and resistance, and second entries. I didn't have that in there. So let me just put that in there. We covered. And that's it for today. This is Vance. Hope you enjoyed my quick presentation on the slow hand method for price action. Bye for now.